This is the briefing for Tuesday, February 13th. A long time ago, I met somebody who taught me a lot about the financial markets and analyzing them from a technical perspective. And I basically have developed that into what I call a behavioral finance perspective based on what he called at one time market development and market structure. Market development being the trend in price in various time frames, and market structure being the strength or weakness of the internals of that trend based on the direction that it's going. One of the things that's difficult in trading the markets is, especially if we're a short-term or a swing trader as I am, is that a lot of times we analyze the markets and our analysis tells us that one thing is going to happen, but it doesn't happen. It takes some time. The problem with that is that our analysis can tell us what we think is going to happen, the higher probability of one event occurring over another, but it doesn't give us the timing. But we do know, if we trust the tools that we've developed over a period of time, that at some point in time, unless the market gives us different information, that we have a high percentage probability of that event occurring over the opposite event, depending on whether the trend is up or the trend is down or the trend is changing. So as you know, from the past couple weeks, I've been talking about the internals of the market being very weak, and the internals, especially volume, really sending us a signal that there was really a lack of buying pressure, and that with every day that passed by, we were seeing fewer and fewer buyers coming into the market. As an example, this is the SPY on a daily basis. And you can see right here, this is volume on the spiders. So you can see this whole rally, this last leg of this rally was basically on lower and lower volume until we got even to yesterday's trading. And yesterday's trading was even lower. Market breadth was diverging. The only thing that was increasing was 52-week highs minus 52-week lows were strengthening as well. So basically today, with the release of the CPI numbers, the market took a big hit. Now the question is, did the majority of the market understand, or were they prescient enough to understand that was going to happen and they stepped back from buying, and that's why we saw lower volume? Nobody knows. We don't know the real reason why volume fell off going into the high, other than the fact that the market was potentially overextended, and the majority of traders and investors felt like it was overextended and stepped back. So today we got a gap down based on the CPI numbers. Now, CPI numbers anticipated was 3%, and it came in at 3.1%. But I think the major repercussion of that is the potential that there's not going to be a rate decline or a rate decrease in the March meeting from the Fed. So you can see this is 15-minute chart of the spiders and a 15-minute chart of the Qs. So it's pretty easy to see here that this was the first level of support, which was 498.50 in the spiders. And then the next level of support basically came in right around the 493 area, and then below that was 492. And it appeared like this was really going to continue moving lower throughout the day. And then we got a little bounce going into the close here, trading back above this 493 area. So in terms of support and resistance, when we trade through support levels, then they become resistance. When we trade through resistance levels, they become support. So basically, if you look at this gap is convictive selling. And that basically says that the people who sold today, that created that gap, feel like the market is going lower, and that they did not want to be in, and they liquidated positions. So basically, this is what I would call single prints from my use in previous days of a market profile chart. So basically, I've found that if you trade through about half of the single prints, or you trade through about half of a gap, the gap's going to get closed. So that's about the 498 area is going to be the next upside resistance for the spiders. In the Qs, I've got this set a little bit differently, mainly because this was support level right below this lower extreme of this area of rotation. But you can look probably about the 433 area in the Qs as being the next upside resistance, 432 up to about 433 in terms of the Qs. Now, the breadth was very negative today. I mean, it absolutely tanked today. And that led us to the point of being extremely oversold in the short-term time frame. Now, going back to the daily charts, you can see volume dropping off and then volume increasing in today's trading as we move down lower. Longer-term support is now at 490, 490, 491, and then below that is going to be about the 478, 479 area in the spiders. And you can see the destruction. This is 80% of the stocks in the S&P 500 were trading lower as opposed to higher. And of course, then we got some real damage to the 52-week highs minus 52-week lows. In terms of the Qs, resistance is this is the 430 area, and you can see that we closed just below that. And the next level of support is going to come in right around the 413 area. Once again, volume falling off going into the high of yesterday, and then of course increased volume in today's trading. And the Russell had broken out, looked like it was going to test the all-time high at 205. Support was resistance and the low of yesterday, and you can see that we closed right at 195.98. Resistance in the Russell is still at 200, and support comes in at 190. Now we're at overbought and oversold. You can see the three different indicators I have here basically are time frame indicators. So this would be the short-term indicator saying we're extremely oversold. The intermediate time indicator would say we are approaching oversold, and the longer-term indicator would suggest then that we are basically neutral and not really close to being oversold at this point in time. Same thing with the Nasdaq. The Nasdaq overbought oversold indicator here. So basically, this does not preclude us from going lower tomorrow. In fact, we could go lower and see a turn up in the short-term extreme oversold indicator. But we have to be aware that we had a lot of damage that was done today. And basically, we have to expect the market that run and pause, that we potentially could get a pause. And the move higher going into the close today could be a signal of that. So looking back at where we are in terms of the short and longer term, the low from today in all of the indices is going to be important support. If that's broken, then that's going to open up trading down to the next intermediate term level of support, being around the 478, 480 area in the spiders. Overall volume in the NYSE ticked up, as you can see. You can see what was happening as the market moved into this high here. It was collapsing. Same thing with the Nasdaq. Nasdaq volume increased slightly on today's low. So it does appear that volume, as I discussed previously, is the fuel that makes the market go. And with a lack of volume, if there's anything that is going to spook this market, the sellers are going to come in and run over the buyers, which is exactly what happened in today's trading. So looking forward to tomorrow, I should say, this is a little bit surprising, the repercussion that we got off the low of today. But let's see what happens. In the spiders, 493.25 down to 492, and then today's low, which comes in right at 490.72. Same thing with the Qs. This is really important resistance in the spiders, this 498.50 area. 432 really important, 432 up to 433 in the Qs, really important area as well. It will be a very interesting day tomorrow. I will pick this back up tomorrow night. But watch these upper areas right through here. If this gap gets closed halfway, then this was a one-day wonder, and we're going to see this high tested again. If not, if it holds and if we start down lower tomorrow, watch out what happens below today's low. That could make a big difference as well. Have a great night, and I'll pick this back up tomorrow.